Wondering what the most important numbers in your business are? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And it dawned on me, I hadn't actually done a video as far as I can recall, because we've done quite a few, talking about the key numbers you should be looking at. And I think there's 7 key ones that we use with owners all the time. And I wanted to touch on those. Mainly, I'm going to concentrate on 3 really important ones that you can pull direct from your records. But I do want to touch on 4 other ones, which I think are absolutely critical, but they're a little bit more complicated to calculate, and it might not be something you can instantly do, but I want you to be aware of them. Now, before we get into it, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So then, where to start? Let's start with the most obvious one that I think would be really important. Now, it's worth saying before we talk about these numbers that for many owners, I think if I think back to all the conversations I've had with owners over the years and all of the ones our team have with business owners, the majority of them just don't look or don't know this information. And I don't think it's because necessarily they don't want to know. I think it's just they don't know what they should be looking at, why it's important, and quite often they just don't have a system to look at it regularly, and there's no easy way to pull it off. So I'm talking you through that lens that I'm aware that this is an issue for you. But the takeaway from this is I want you to go back, put in your diary a date. If you're not doing it at all, monthly would be a good start, but weekly, even daily if you had the figures, and look at these key figures and just be aware of what's going on in your business, because figures do paint a picture and tell a story, and you can do some magic with them. So the first important thing to look at is your revenue. So you might have heard the term revenue, turnover, sales, doesn't matter, it's all the same thing. And this is ultimately, what you're selling, how much are you selling, and it's a key indicator of whether you're growing or not. It's not the be all and end all, but I think it's where, particularly in the early days, that's where you're going to spend most of your effort. You want to sell some more, deal with more people, more customers, more clients, and generally keep that going. And that's the most obvious measure. It's probably the easiest one for you to figure out. But then I come across a lot of owners that really don't know what they did in the last 12 months. And it's a surprise to them when we present their figures and go, you did this, congrats. Or, oh, did you know you only did this versus the previous year? And people are quite often like, oh no, do you know what? I didn't really track it. So really important. And looking at that on a month by month is really good. And looking at it once you start going and you're in year 2 and 3, looking at what did it look like versus the previous year? What does it look like versus this month? So if it's May, what did May this year look like May last year? And you start to understand, say, seasonal trends. Is this generally a quiet time? Does everyone go on holiday in August and it's a real quiet time for my business? I'm in the education sector, and if it's really busy during September, like these kind of things can really help you with planning and just understanding whether to get yourself depressed about the month's sales or, think actually this is a really good month based on history. Now for me, this is one we have done other videos on under different titles, but one of the key, most magical numbers in your business is going to be your gross profit margin. Now that is an accountancy term, and effectively what it means is it's how profitable are your key activities. So for every pound of revenue that the business brings in, take off the cost that it takes to actually directly produce that thing, that service, that product. What's left at profit, that's going to be your gross profit. So if you sold a product, you might be looking at what's the materials used. If you're paying people directly to make it, what's that? Or if you've got freelancer costs that is involved in delivering that service, take all that off, take your delivery costs off, and what's left is your gross profit. So you're not looking at things like your phone, marketing, accountancy, all these things. They're a lot more like overheads. So this is forgetting all them. This is this top end, as we like to see it. If you look at it on a profit and loss, the report that shows you kind of your ins and outs and what profit you made, it's kind of the top end of it. And the reason that can be so magical is you can work out a percentage, your gross profit margin, and that's a percentage of that top figure. So all you do is you work out, that's how much I add in, that's how much it costs to produce it, that's my gross profit. You put in your calculator that gross profit figure, divide by the top sales figure, and it gives you what comes out there as a percentage. So and you can play around with it, that for every £100, if your gross profit margin is 35%, you're going to make £35 before taking into account those overheads that we talked about that aren't included in that calculation. And knowing that and tracking that can be an absolute game changer. If for a lot of businesses, particularly as they're growing, they have staff involved with delivering services, or you're a product-based business, margins is everything. We quite often see retail businesses operating at, say, a 30% margin. If you're doing a lot of money, making that a 32% margin can be a game changer for you. Or what's happening quite now in the UK because of the costs rising is those margins are shrinking, and people are going to get caught unawares when they realise they're just not making the money they used to. Why is that? Well, it's because of that margin and we're not monitoring it. So gross profit margin, really, really important. It'd be one of the key things to look at, particularly as your business grows. Now, in terms of the big 3, the other one I think that most people would argue is probably the most important one is actually net profit. So we already talked about the top half. So we talked about revenue, we talked about gross profits, the next bit down, like what we're making after all of our direct costs are taken off. And then what are we making after everything, after all of our overheads and everything? That's your net profit. Now, again, you can work that out as a percentage. You can take that net profit figure, you can divide it in your calculator by the top figure, and that again gives you some idea that, you know, if you did X amount of pounds, you'll have this left at the end. As you as the owner generally, like what's available to me in profits, what's available to invest as a paper exercise anyway, that's going to help you figure that out. But that's a really good indicator, because sometimes you can grow that top line. You can have that revenue grows massively and you make less money than you did as a smaller business. That's quite common because you've got other costs involved with scaling the business or growing that you didn't have before. So monitoring that can really help give you an idea of are you moving in the right direction, and it's a very, very powerful metric. Now, this is quite often, I want to use an accountancy term here, and I hate doing these in videos, but there's something known as the EBITDA. Sounds a really weird word, but EBITDA. And what that is, it's important to you as a startup or as a growing company if you're looking for investors or lending, things like that, because it's a metric that they quite often look at. And all that is it's net profit, and then they take out kind of the exceptional type of stuff that's not that relevant to them. So it'll be like, so it stands for earnings before interest, tax, depreciation and amortization, and basically it's all the stuff that's a bit funky. So, you know, the interest payments they're paying on loans, or depreciation, which is the reduction in value of some of the stuff the company owns. So like if you've got like a MacBook in your company, you're going to write that off over several years, and that's known as depreciation. So they sort of strip all that out and look at kind of a bit more of a profitability score, really. So I just want you to be aware that that exists, because I think it always is good that you're aware of that term. So EBITDA. Now, if you do nothing else and you stop the video here, those are the three metrics I want you to try and work out, and you should be able to do that. If you're in the cloud, you're using something like a Xero or QuickBooks, you should just be able to go into the software program, print a profit and loss report and start looking at it. Now, depending how good your bookkeeping is and if you've got everything right, will make a big difference as to whether how accurate those things are going to be able to do. But ultimately, they're relatively easy things to find. Now, the following four are really, really important, but ultimately they are a bit more difficult to calculate. You might need a bit of software or some general maths and some figures, but I do want to talk about them so you're aware they do exist and why they're important. So the first one of these four is revenue per employee. So if you're a startup, it's probably only you, potentially. Sometimes there are more. So that figure's not going to be as important as it is as you grow. But basically monitoring that figure and seeing if you can improve it is quite a wide look at how efficient your team is, because a lot of things affect that figure. You know, the costs of the employees affect that figure, because how many can you get for the amount of money you're doing? You know, how efficient are they? How engaged are they? And all these things. And that's a really interesting figure. So quite often we use this as like a key 7 figures as like a holistic and overall approach to try and work out what's going on under the bonnet of the business. And that's quite a key one. So I'm not going to spend too much time there, but know that tracking that's really, really good, because you can see sometimes revenue per employee will be like 125,000 per person employed in your business. And you're like, that's really good. And then you'll see some down at 40. You're like, well, why the difference? And it's good to dig under it and understand that. So that's a key one. Cash days. Now, cash days is really important. It's actually this particular one that I'm talking to you and showing you now is basically a calculation of how good you are at turning money around in the business. So it will be based on how long does your customer take to, or clients take to pay you, how long do you take to pay your suppliers, and then there's things if you've got stock involved or work in progress, that also gets taken into this maths calculation, throws out a number, and the lower number the better. So it's quite often we work with clients and we realise their numbers say like in the 50s or the 60s or even the 70s, and quite often when you dig under the bonnet you find that they're having problems getting paid. So improving that process is going to help bring that number down. Sometimes they're paying their suppliers too quick. They've been given 30-day terms and they're paying on day one, and actually they could help the cash flow of the business by delaying that and paying within terms. Not paying late, never pay late, but paying within terms or just staggering that a bit would really, really help. So that's a really good one for making sure you've got more cash in the bank at any one time. And talking to cash, the core cash target, I think it's really important to understand as a business what kind of the base level of cash you've got is. I mean, in this particular example I'm showing you now, they've got nowhere near enough cash really. And the idea is that you want to hit this target. There's lots of ways of calculating it, but you might look at things like what are the taxes that are due anywhere soon, and you know, we might want 2.5 months worth of overheads or something like that in there, whatever you work that out at, and you can be comfy that everything else can be taken either as profit or invested in new projects. But it's nice to have kind of a buffer, and in our example here we've calculated this buffer at a certain level, and we want to help the client improve to get towards that buffer. And again, like we look at all these things together. So you're looking at, okay, can we improve the cash days to help you get your cash in, for example? So it's good to know what your actual cash target is and how you're doing against that. And then finally, the business return. And again, it's one of these more overall figures, but it's kind of looking at, well, if you decided just to shut the business today, and put that somewhere else? Could you actually be better off just shutting the business, cashing in and walking away and sticking it in the bank almost? It isn't exactly that, but it has that feel to it. And how you calculate it varies from person to person, but in these examples we quite often look at what's your profit you're doing year to date versus roughly the value of the company, and are you happy with that return? Like if you shut it down today and got that value out of it, are you better doing something else with that than what you're currently doing? So, if your business is potentially worth £1 million and you're generating £5,000 a year, like, is that a good return, for all your efforts and what the value of that business is? So that's a good one as an overall final metric to see how you're going. I'll probably make some smaller ones digging in a bit deeper into what you can do to improve some of these things, but for now that gives you an idea of the 7 figures that you want to look at. Please make sure in your diary to put a date in to check these things regularly, or at least get them in front of you if you haven't already. If you've enjoyed these videos, make sure to click the subscribe button and share it with anybody that you think would benefit. See you in the next one.